I feel like every story here today could be on the front page of a newspaper. Hello and welcome to the Northern Miner Podcast. My name is Adrian Pocobelli. Just a ton to get through, as usual. So welcome back and welcome to all new listeners. What a beat we have here. And again, what a battle for what to start with. We have a new record in gold. Gold futures on CNBC, $3,734.80. US dollars. For those Canadians out there doing even better, I'm scared to look at what gold is in Canadian dollars. Dare we look? We do not have time, but maybe we can make time. Let us just see Canadian to US, $3,734. That is $5,140 Canadian. $5,140 Canadian. You know, I have to say, I've made light in the past of Rob McEwen saying gold $5,000 over the years. But I have to say, in Canadian dollars, Rob McEwen has a point. Touché, Mr. McEwen. Touché. So $3,734.80 US. So let's run through here. So we have a story at mining.com. This is by a staff writer. Gold price sets new record in run-up to Fed meeting. So once again, the Fed taking center stage as the rationale for this increase in price. Gold prices rose to a new all-time high on Monday as investors geared up for this week's Federal Reserve meeting with the expectation that the U.S. Central Bank will finally let loose and start cutting interest rates. So if we had to speculate here, we could imagine that perhaps this is a buy the rumor, sell the news event. It continues. Spot gold hit a fresh peak of $3,682.51 per ounce, about $9 higher than its previous high set nearly a week ago. U.S. gold futures also jumped about 1% to $3,724.90 per ounce, right around where we are on CNBC. The latest move takes gold's year-to-date gains up 40%, with geopolitical uncertainty and robust central bank buying providing strong momentum for the safe haven metal. After surpassing the $3,500 mark in April, gold has largely consolidated within a tight range, but analysts say it looks poised to break out in the near term. And finally, we have a quote from Peter Grant, Vice President and Senior Metals Strategist at Zaner Metals, who told Reuters, quote, expectations of a 25 basis point rate cut are largely baked into the cake at this point. I mean, I wonder to myself, for those that are expecting a 50 basis point cut, will a 25 basis point rate cut appear as a disappointment for the market? Of course, President Trump putting pressure on Federal Reserve Chair Jerome Powell to aggressively lower rates. Another headline, and this is quite a moment, gold price surpasses inflation-adjusted record high set in 1980. This is Bloomberg News via mining.com. Gold has eclipsed its inflation-adjusted peak set more than 45 years ago, as growing anxiety about the U.S. economy's trajectory takes bullion's blistering three-year bull run deeper into uncharted territory. What a line by Bloomberg News. We are going into uncharted territory on the gold price. So exciting times in the gold market. Another headline, Polish central bank increases gold holding target to 30% of reserves. This is Reuters via mining.com. I mean, there is concern, and we're going to hear from Ray Dalio here in a second in another article. I mean, there is a concern that the house of cards is going to fall. I think Ray Dalio called it a heart attack. Could happen here as the markets continue to relentlessly move higher. Again, I'm kind of back to Jeffrey Christian's point that, a lot of the investor demand for gold, to a certain degree, is almost what you might call a somewhat boring explanation or rationale, which is diversification from all the gains in the stock market. And this is Reuters via mining.com. Poland's central bank will seek to increase its gold holdings to 30% of its reserve assets, the bank said on Wednesday, as it seeks to bolster the country's financial security. The National Bank of Poland said the scale and pace of purchases would depend on market conditions. And we have a quote from NBP Governor Adam Glapiński, who said in an emailed statement, quote, in these difficult times of global turmoil and the search for a new financial order, gold is the only safe investment for state reserves. I think people are asking themselves on a individual to the governmental level, how do I preserve my wealth? That is the question, I think, increasingly that people are wondering. I mean, another way of putting it is, can everybody get rich who's in the market? And who's not in the market? At least in terms of pension funds, it seems like the whole shebang is in the market. What happens when sentiment shifts? And inevitably, one imagines it has to at some point. So let's actually turn to this Ray Dalio article. Ray Dalio suggests gold as shield for U.S. markets at risk of heart attack. This is Reuters via mining.com. Bridgewater founder and the firm's former CEO, Ray Dalio, says gold might be a way to shield investors from unhealthy markets overburdened with debt. Dalio warned that as the U.S. spends more to service its debts, this, quote, squeezes out other spending and builds up as plaque would in a clogged human circulatory system. Quote, a doctor would warn of a heart attack, he said. It's quite an interesting analogy, isn't it? You know, there's a suddenness to a heart attack, but the fundamentals of what leads to a heart attack, one could argue, builds over the weeks, months, and years. Dalio continued, quote, a well-diversified portfolio would have somewhere between 10 and 15% in the portfolio of gold. You know, when you think of people you know, family, friends, professionals that have portfolios, how many of them have 15% in gold? We are in uncharted territory. This was not the conventional advice 10 years ago. Generally, it was 5%, and if you were quite bullish, for lack of a better term, from these, mainstream hedge fund managers, you would say 10% if you wanted to be out there. 10 to 15% is now well diversified. So very interesting. Let's see what else it says. With the world, quote, abundant in debt and with geopolitical tensions rising, investors should question whose money do you own when thinking about how to build a neutral portfolio, said Dalio. Whose money do you own? I guess referring to debt. Standard Chartered CEO Bill Winters, who sat on the panel alongside Dalio, said that though market valuations in Europe were not as high as in the United States, the conditions were similar. Quote, the UK and France are in similar situations, but markets have been providing more severe constraints than the US, said Winters. So, pretty interesting. And just a couple of more follow-up headlines. China proposes rule changes to ease gold imports and exports, Bloomberg News via mining.com. And it says that the country plans to expand the use of, quote, multi-use permits, a faster approval system by increasing the number of ports that can accept them, according to a draft proposal from the People's Bank of China. The central bank also plans to extend their validity to 9 months and remove limits on the number of times each permit can be used. So it's tempting to call this a bit of a liberalization in China of gold imports and exports. So very interesting. Now we have a huge headline here, which I could have easily have started with. This is courtesy of the Financial Times and speaks to one of the biggest stories of the year here. It is a contender. The squeeze on critical minerals between the two main superpowers, China and the United States, and one preventing the other, arguably, potentially, from developing its military. Massive story, which in a sense has not really gotten the attention it deserves. So big headline out of the Financial Times yesterday. China's curbs on defense metal germanium create, quote, desperate supply squeeze. This is Camilla Hodgson in London and Yan Liu in Beijing. Chinese exports on germanium, a metal crucial for the defense industry, has created a desperate supply crunch and pushed prices to their highest level in at least 14 years, traders say. Germanium is essential to the production of thermal imaging systems used in military equipment, including fighter jets. But its production is heavily dominated by China, and companies do not typically hold large stockpiles. China said in 2023 that it would halt the export of germanium, gallium, and antimony following restrictions by the US and Netherlands on advanced chips and chip-making equipment. However, traders and analysts said exports started to nosedive in earnest from the end of 2024 onwards. I mean, my memory was it was the end of 2024 when it became a true export ban. Terrence Bell of minor metals trader Strategic Metal Investments said he had been unable to buy germanium for at least 6 months, with shipments from China having, quote, completely dried up. I spent my whole summer taking 2 to 3 inquiries a day from companies looking for germanium. It's desperate out there. Germanium imports to the U.S. from China fell about 40% between January and July compared with the same period in 2024, according to an analysis of trade data by Silverado Policy Accelerator, a nonprofit organization. As of Wednesday, the price of germanium had risen to almost $5,000 per kilogram compared to just over $1,000 at the start of 2023, according to price reporting agency Fast Markets. The September price is the highest ever recorded by Fast Markets in data going back to 2011. Christian Hell of trading house Tradium said germanium demand was, quote, through the roof, with requests coming mostly from the US and Europe. Quote, almost everybody is approaching us, and there was, quote, panic in the market, with Tradium unable to fulfill all the inquiries we're getting, he said. The Chinese restrictions have, quote, devastated the ability for there to be a functioning spot market, said Aaron Jerome, a trader at Littman & Walton Company. Quote, people we used to be able to buy 100 kilograms from, we're lucky now if they can give us 10 kilograms and the price is 3 to 4 times higher. Now, I've brought this up in the past. Does the price at a certain point become irrelevant? If a mineral or metal simply dries up, what happens to a market then? As it says, the spot trading price is beginning to deteriorate. Once you run out, what happens to price? I mean, that assumes that there's a market, but if there's no supply, I mean, do you have a market? Is kind of the question. Scrolling down, Russia has historically been a supplier of germanium, but sanctions imposed on the country following its full-scale invasion of Ukraine have contributed to supply shortages in the West. In a notable signal to the market, U.S. defense group Lockheed Martin announced in August a germanium supply agreement with producer Korea Zinc. And we covered that story on this program. Since purchasing germanium has historically been outsourced by defense companies to subcontractors, the deal was a signal of how challenging the market had become, said Jerome. Finding substitute materials is difficult, in part given the performance and precision requirements of the military optics application germanium goes into, said Caroline Meskar, a Fast Markets analyst. Quote, you might need a complete redesign, and there are situations where any potential reduction in accuracy is unacceptable, she said. Florida-based Lightpath Technologies, which has received U.S. government funding, is working on providing alternatives. Quote, no one in their right mind is going to redesign an existing system until they have to. But some companies were now starting to do so, said Lightpath's chief executive Sam Rubin. So an urgent situation with germanium, and you just wonder, what mineral are we going to read about next, and what is the bigger picture when we think of copper? You know, like this is germanium. What happens when we run out of copper? Also, the Financial Times, Mike Pompeo calls on U.S. to move faster on critical minerals. I thought they were moving pretty fast. This is quite something. This is by Leslie Hook. Former U.S. Secretary of State Mike Pompeo has called on the Trump administration to move faster to secure the supply chains of critical minerals, warning that shortages could pose a threat to national security. The comments by Pompeo, who sits on the board of London-listed copper miner ACG Metals and is an advisor to NASDAQ-listed USA Rare Earth, highlight growing concerns in the West about China's stranglehold on minerals that are key to the energy transition and defense systems. Quote, the Chinese Communist Party is watching this, and they can see America's focus on this is something they will have to counter. He told the Financial Times, quote, collectively, we have to get this right to do everything we can. Pompeo, a former head of the CIA who served as Secretary of State during the first Trump administration, said the world was entering, quote, a new geopolitical epoch, not seen since the Second World War, and that it was imperative for the United States to secure critical minerals from, quote, allied sources. So, intensity increasing on the critical minerals front. Also, some big movements in the aluminum market. Aluminum price holds gain as withdrawals from warehouses in Asia surge. This Bloomberg News via mining.com. Aluminum held recent gains as requests to make withdrawals from London Metal Exchange warehouses in Asia surged for a second day. Remember just last week there was the story of Germany and the scrap copper that was all bought up by China? Let's see what's going on with aluminum. Prices fluctuated near $2,615 a ton in choppy trading after advancing 1% over the previous two sessions. Requests to load out almost 100,000 tons of aluminum from LME depots in Malaysia in just 2 days reduced the volume of stockpiles available to other buyers from a 14-month high. The LME aluminum market has been rocked this year as traders vied for control of exchange inventories, with Bloomberg reporting in June that Mercuria Energy Group had amassed more than 90% of available stocks and an unusually large position in the market. The move prompted the bourse to introduce new rules compelling traders with large futures positions to lend them back at capped rates, supplementing similar rules already governing inventory holdings. While stockpiles have risen in recent months, they remain historically low, and there have been ongoing concerns about supply. Now, the Financial Times also wrote about this. Here's the headline: Aluminum prices driven higher by global supply squeeze. And they add to the story here. Scrolling down, analysts warn a lack of supply caused by production curbs in China and limited smelting capacity elsewhere in the world, combined with rising global demand, could mean prices have further to rise. Aluminum stocks in the LME network of warehouses in Europe and North America have fallen close to all-time lows, while those in Shanghai Futures Exchange facilities have fallen by about half since the start of April. Quote, due to continued demand from China's stimulus measures combined with limited production, we anticipate an increase in aluminum prices by the end of the year, said Thomas Strobel, an investment strategist at Unicredit. Quote, rising U.S. imports and low inventories worldwide could lead to a bottleneck. Continuing on, exclusive from Reuters, India explores rare earth deal with Myanmar rebels after Chinese curbs. And so this is quite a development as we see the rapprochement between India and China. One wonders what China thinks of this. And here's a summary from Reuters. India seeks rare earth samples from Myanmar's Kachin Independence Army, sources say. China restricts exports of rare earth magnets over which it has a near monopoly. India would face logistical challenges in transporting rare earths from Myanmar, something we've discussed before. And Delhi lacks technology to transform minerals into magnets at industrial scale. Exactly. So India doesn't have the processing facility for rare earths, but just the fact that they're trying to obtain rare earth samples from Myanmar is quite remarkable. And we've also seen the U.S. take interest in Myanmar in recent months as well. So Myanmar continues to be a watch this space area in regard to the heavy rare earths that are produced there. Continuing on, we have an exclusive from Reuters. Congo-Rwanda draft deal outlines role of U.S., others in revamp of minerals sector. This is September 14th. Rwanda and the Democratic Republic of Congo will commit to working with third parties, including the U.S., to revamp their mineral supply chains and develop reforms, according to a draft of an economic framework seen by Reuters, as they seek to spur investment following a peace deal reached in Washington. The countries agreed on the draft framework, which is part of the peace deal, a source familiar with the matter said, adding that the draft was now being discussed by stakeholders, including the private sector, multilateral banks, and some donor agencies of other countries. Congo and Rwanda will likely meet in early October to finalize the framework, the source added. It would be signed by heads of state at a later date. That would be quite something if the United States ended the conflict between the Democratic Republic of Congo and Rwanda. One would have to say that is a major accomplishment should this come to pass. Continuing in the continent of Africa, we have an update on Barrick and the Loulo-Gounkoto complex. A Barrick executive has switched sides to advise Mali president in gold dispute. This is Reuters via mining.com. A senior Barrick mining executive who had been representing the company in tense negotiations with Mali's government has switched sides to become an advisor to Mali's president, a mines ministry official told Reuters on Wednesday. I mean, this is a gigantic gold complex. So the amount of money at stake here is truly gigantic when we consider the gold price. Hilaire Diarra was general manager of Barrick's Tongon gold mine in Ivory Coast before he was named special counselor to Mali's president in a decree signed in late August and seen by Reuters this week. The mines ministry official confirmed the document's authenticity on Wednesday. The move represents a further blow to the Canadian mining company's efforts to negotiate for control of its Loulo-Gounkoto gold mining complex, one of the most high-profile examples of resource nationalism among West African military governments seeking greater control over their gold and uranium wealth. And here we have another headline out of the Sahel. Burkina Faso revokes gold mine permit amid legal disputes. And this is on September 11th via APA News. Burkina Faso's government has revoked the operating license for the large gold mine run by Taparco Mining SA. The decision, announced on Thursday, September 11th, comes after authorities cited legal disputes and the company's failure to meet its socio-economic commitments. So a mining permit has been revoked in Burkina Faso for a gold mine. And another headline out of the Sahel, Niger state deepens economic ties with Russia in agriculture and mining. And another headline out of Niger, GovEx Uranium, Niger pause Manduela dispute. And that is courtesy of Blair McBride at the Northern Miner. GovEx Uranium and the Niger government have agreed to extend a break in international arbitration over their Manduela project clash by another 6 months. While the two sides are willing to find a solution, the extension doesn't guarantee the talks will lead to a definitive agreement, GovEx said in a release on Thursday. So, looking tenuous over there. Those are your news headlines, and we haven't even talked about the latest on Anglo-Tech, as it is now being called here, so lots to look forward to in the news section. As well as our featured content, we have Nicole Richards of Allonnia telling us about the remarkable developments in biotechnology and how these breakthroughs are now applying to the mining industry, particularly in regard to tailings ponds, and how what was previously considered waste can now be, as Nicole puts it, valorized, where metal and minerals can now be extracted from what was once considered waste. So a very fascinating interview with Nicole Richards of Allonnia coming up this episode. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to the news. And turning to the website, Anglo-Tech deal hinges on troubled copper mine in Chile. This is Bloomberg News via mining.com. So we're discussing how these two companies, Anglo American and Teck Resources, have copper mines in Chile that are near each other, if not side by side, and that being a potential motive for this merger. At the heart of one of the mining industry's most ambitious combinations is a plan to fix a problematic Teck Resources copper mine in Chile's Atacama Desert, and ultimately to integrate it with a vast neighboring operation that has long been a jewel in Anglo American's crown. That, however, will require resolving complex operational troubles that have plagued Quebrada Blanca, known as QB, and then navigating relationships with partners in Collahuasi, a mine Anglo doesn't control. Teck has staked its growth plans on QB, but a major overhaul of the mine was a headache from its early days, coming in more than 80% over budget and years behind schedule. While delays and overruns are not unheard of in the industry, the operation has also since struggled with instability in the pit and plant, a shiploader outage, and now waste storage. The travails forced Teck to trim output guidance in July, and earlier this month, just days before announcing a more than $50 billion merger agreement with Anglo, it said it would defer decisions on growth projects to focus on fixing QB. Quote, Quebrada Blanca has sizable technical challenges to reach capacity, said Juan Ignacio Guzman, who heads GEM, a mineral consulting firm in Chile. Quote, the synergies it could have with Collahuasi aren't simple. Still, the benefits of a working combination would be hefty. In an industry where vast, usually distant operations mean substantial synergies are hard to come by. Tying up Collahuasi, specifically processing its richer ore at QB plants, could mean an average annual boost to EBITDA of $1.4 billion, the two companies said. The revenue synergies would come on top of the $800 million a year in cost savings from more standard areas like procurement and corporate functions in a combined company. Quote, I think it's conservative, said George Chevalier, portfolio manager at 91, referring to the $1.4 billion boost. Quote, the optionality to expand and develop that complex over multiple decades is not in that number. Under plans sketched out by the two companies this week, a roughly 15-kilometer conveyor would be built to feed Collahuasi's high-quality ore into QB's new processing plants. That would generate the equivalent of a new mine's worth of supply, an incremental annual output of about 175,000 tons of copper from 2030 to 2049 at a fraction of the time and per ton cost. And this is quite something. One scenario could see combined annual output approach 1 million tons by the early 2030s, according to industry consultancy CRU Group, that could put it above BHP Group's Escondida, though not necessarily for the long haul as the world's largest copper mine. Quote, "It is absolutely feasible that Collahuasi QB complex could surpass Escondida's level of copper outturn in the early 2030s, said CRU analyst William Tankard. So this is quite something. So definitely there are synergies there with these projects. Now, there was another side to this whole story, which I thought was quite interesting because, of course, Glencore tried to take over Teck Resources and BHP tried to take over Anglo American. And this is quite interesting, this story that's come out. Teck's founder sought merger with Anglo before it was too late. And it does ring true. One could imagine Teck Resources has a reputation of having quite a lot of pride in their company culture. And were they to get swallowed up by Glencore, for example, they probably feel that everything they built as a company might be, swallowed up, so to speak, by the larger Glencore company culture with the acquisition. So one does wonder, and perhaps it was the same situation, the same concern with Anglo American and BHP potentially. So let's see what it says here. It's Bloomberg News via mining.com. 2 years ago, when Glencore proposed an unsolicited $23 billion takeover of Teck Resources, the Canadian miner's founder decisively rejected the idea. Quote, "Now is not the time," Norman Keevil Jr. said back then. Fast forward to 2025, and the 87-year-old Keevil is one of the chief proponents of a mammoth deal to combine Teck with London-based Anglo American. The merger would create a roughly $60 billion company and one of the world's top copper producers. But both companies describe it as a zero-premium deal, in contrast to Glencore's proposal, which initially offered a 20% takeover premium. Leaving that money on the table was the price Keevil was willing to pay to keep the company headquartered in Canada. The industry veteran, who built Teck with his father about 6 decades ago, is also the controlling shareholder, giving him significant sway over Canada's largest diversified mining company. He played a crucial role in negotiating the merger with Anglo, according to people familiar with the matter. While the structure of the deal was largely decided among the firm's bankers and corporate development teams, the negotiators were careful not to run afoul of Keevil, knowing his aversion to a takeover that would erase the Teck brand and allow it to be swallowed by a bigger foreign company. Certain key concessions were made at Keevil's behest, including the agreement to headquarter the company in Canada, said the people who asked not to be identified discussing internal debates. Keevil wanted to get a deal sooner rather than later because his grip on the company was weakening, according to the people. In 2023, amid Glencore's takeover attempt, Teck shareholders approved an arrangement that would see Keevil's controlling stake wind down by 2029, after which he'd lose any ability to sink a takeover that other investors favored. With that expiration date looming, Keevil was eager to protect his legacy and Teck's status as a Canadian company. And I think the key word there is legacy. And we have a quote from Pierre Graton, president of the Mining Association of Canada. Quote, "The longer Norm waited to make a deal, the less ability he would have to shape it." Teck and Anglo didn't respond to requests for comments. In an email to Bloomberg News, Keevil said the deal was, quote, "the right thing to do." It merges 2 mid-level international copper miners into a single top-tier one, stronger than either alone, and with its global operating headquarters and top management based right here in Canada. Before, Canada had never had that. Now we will, Keevil wrote. So very interesting. Then we got a report from Reuters where Prime Minister Mark Carney also wanted the headquarters to stay in Canada in order to greenlight this deal. It was actually the first thing I thought of when I heard of this deal. I think I may have even mentioned it on the show, which is, what is Canada going to have to say about this? These aren't insignificant assets with insignificant metal here. We're talking about copper. So check out this headline from Reuters via mining.com. Prime Minister told Anglo American to move headquarters to Canada for Teck deal nod, according to a report. Canadian Prime Minister Mark Carney told Anglo American to move its headquarters to Canada or its proposed acquisition of Teck Resources would not be allowed to proceed, the Globe and Mail reported on Monday, citing 2 sources familiar with the matter. In his conversations with Anglo American, Carney made it clear that shifting headquarters was a requirement that any prospective buyer for Teck would have to meet, the Globe and Mail report added. An Anglo American spokesperson declined to comment on the report but pointed to CEO Duncan Wanblad's statement last week that Vancouver is the natural location for the merged company, given its operations and projects are largely based in the Americas. Quote, "Anglo American has also had its Americas exploration team based out of Vancouver for a long time, so we are very familiar with the setup," the spokesperson told Reuters in an emailed statement. But surely, when you are trying to construct a deal like this in an environment of intense resource nationalism like we're seeing, surely they had to consider this. Without even hearing from the Prime Minister, one would imagine that this was going through the CEO's minds. Continuing with Mark Carney in Canada, interesting headline, Canada fast-tracks Newmont Foran projects. This by Colin McClelland at northernminer.com. Canadian Prime Minister Mark Carney has named Newmont's Red Chris copper gold mine expansion in British Columbia and Foran Mining's McKelvina Bay copper project in Saskatchewan to a federal fast-track list. The initiative is part of a new Major Projects Office intended to cut the permitting timelines that often delay mines, pipelines, and energy projects for more than a decade. Carney said the streamlined approvals will help spur investment and jobs while bolstering supply chains for critical minerals. The Prime Minister didn't state dollar amounts of potential government investment in the project. Quote, "We used to build big things in this country," Carney told reporters on Thursday. Quote, "We used to build them quickly. It's time to get back at it and get on with it." So music to a lot of the mining industry's ears, I'm sure. And scrolling down, the government also included the Shell-led expansion of the LNG Canada plant in British Columbia, a container port expansion in Montreal, and a small modular nuclear reactor project in Ontario among the 5 projects selected. Together, they reflect Ottawa's strategy to channel investments into industries that support the energy transition and reduce exposure to U.S. trade frictions. So, on one hand, Newmont's Red Chris copper gold mine is getting fast-tracked, and then we got this headline from last week, Newmont applies for voluntary delisting from Toronto Stock Exchange. This is Reuters via mining.com. Newmont has applied for a voluntary delisting of its common shares from the Toronto Stock Exchange due to low trading volumes, the world's top gold miner said on Wednesday. I wonder how much significance the Toronto Stock Exchange places on this development. The move, expected to be effective on or about the close of trading September 24th, is likely to improve the administrative efficiency and reduce costs. Bloomberg News reported in August that Newmont has set a target of reducing costs by $300 per ounce, which could lead to thousands of layoffs. I don't think we saw a follow-up on that, interestingly, because gold broke out the following Monday. As I was commenting on that show, I mean, how do you tell everybody they're about to be laid off as gold hits new records? No developments there yet. Also, another development with Newmont. Newmont sells Coffee Gold Project for $150 million. This is Cecilia Jamasmi at mining.com. Newmont Corporation has agreed to sell its Coffee Gold Project in Canada's Yukon Territory to Fuerte Metals for up to $150 million, completing a year-long divestment plan. Under the deal, Newmont will receive $10 million in cash at closing and $40 million in Fuerte shares. The company will also retain a 3% net smelter return royalty on the project, which Fuerte can repurchase for up to $100 million. The sale finalizes Newmont's exit from 8 non-core assets it put on the block in early 2024, including the Éléonore mine in Quebec, the Musselwhite and Porcupine mines in Ontario, and its 70% stake in the Havieron project in Western Australia. Continuing on, Russia considers moratorium on bankruptcies of indebted metal giants. This is quite interesting as well. This is Reuters via mining.com. Russia is considering a moratorium on bankruptcies in the metals industry. A government document showed on Wednesday in a sign of growing concern about a sector struggling with falling demand, high interest rates, and a strong ruble. The document, a protocol from the government's Financial Stability Commission meeting on August 28th, asked the economy and industry ministries to present proposals by October 28th on the advisability of introducing an effective ban on bankruptcies in the sector. The news was first reported by Commerçant Daily. Another big story, nickel price gains after Indonesia seizes part of giant mine. This is Bloomberg News via mining.com. Nickel rose after Indonesia seized part of a giant mine semi-owned by top Chinese producer Tsingshan Holding Group, underlining risks to ore output in the world's largest supplier. A government task force on Thursday took control of the 148 hectares of the operation owned by PT Weda Bay Nickel, the world's largest mine for the battery metal, over an alleged permit violation. France's Aramet SA, one of the company's shareholders, has said it sees no impacts on operations at this stage. Still, the seizure highlights ongoing challenges for reliable supply from Indonesia, which accounts for well over half of global nickel output. President Prabowo Subianto, who has outlined bold and costly plans for the nation, has also promised a crackdown on illegal mining, which may disrupt the flow of ore to local processors. And also out of Indonesia, Indonesia aims to increase ownership of Freeport unit by more than 10%. This is Reuters via mining.com. So the first story was on September 12th. This story is on September 15th. The Indonesian government is aiming to increase the state share of the copper and gold miner PT Freeport Indonesia by more than 10%, the country's mining minister Bahlil Lahadalia said on Monday. Indonesia has flagged its interest in gaining more control over Freeport Indonesia in recent years, with Bahlil saying that it would be a condition for Freeport to extend its mining permit beyond 2041. So those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.04%. That is down 0.02% on the week, continuing its downward move over the last 5 weeks. The UK 10-year gilt is yielding 4.65%. That is 0.03% higher than last week. Italy's 10-year bond is unchanged, yielding 3.51%. The German 10-year Bund is yielding 2.7%. That is 0.04% higher than last week. The Japanese 10-year bond is yielding 1.6%. That is 0.03% higher than last week. And the big mover is China's 10-year bond, up 0.1% on the week, yielding 1.89%. So perhaps that is on stimulus, as we were hearing about earlier this episode. Turning to precious metals, gold is trading at $3,736.50 per ounce. That is $42 higher on the week. Silver is trading at $43.18 per ounce. That is $1.28 higher than last week. Platinum is trading at $1,413.40 per ounce. That is $33 higher than last week. And palladium is trading at $1,202.50 per ounce. That is $71 higher than last week. So precious metals showing strength across the board. Turning to industrial metals, copper is trading at $4.66 per pound. That is 17 cents higher than last week. Iron ore is trading at $105.43 per metric ton, a price we haven't seen in many months here. And that is 94 cents higher than last week. Aluminum is trading at $1.23 per pound. That is 4 cents higher than last week, and also at levels we haven't seen in over a year. On the Northern Miner podcast, lead is trading at 91 cents per pound. That is a penny higher than last week. Nickel is just below $7 at $6.98 per pound. That is 8 cents higher than last week. Tin is also higher at $15.86 per pound. That is 29 cents higher than last week. Cobalt is unchanged at $15.12 per pound. And lithium is lower at $10.17 per kilogram. That is 31 cents lower than last week. And uranium is also lower at $75.70 per pound. That is 50 cents lower than last week. And zinc is higher at $1.35 per pound. That is 4 cents higher than last week. And it's been about 5-6 months since we've seen $1.35 on zinc, so also showing strength. Zooming out, metals looking strong across the board is really what this looks like. Is this, as Jeffrey Christian puts it, a bull market in real things? And it's increasingly seeming as if there is a diversification going on here into the metals. Quite fascinating. Of course, the exceptions being uranium and lithium, but lithium has just come off of quite a move, so understandable there. And uranium is at $75 after languishing in the mid-60s there a few months ago. So still overall doing quite well. And those are your metal prices. Coming up, I'm very pleased to welcome for the first time to the Northern Miner podcast, Nicole Richards, Chief Executive Officer of Allonnia. We discuss the fascinating impact of recent developments in biotechnology and how that is changing the mining industry, particularly in regards to the treatment of waste and tailings ponds. But as Nicole says, we are just getting started here. So a fascinating discussion on how the mining industry could really change over the coming years and decades. I hope you enjoy the conversation, and I will see you on the other side. Join us today. I'm very pleased to welcome to the Northern Miner Podcast for the very first time, Nicole Richards, CEO of Allonnia, a biotech company that is also involved in mining. Nicole, welcome to the show.
Thank you. It's great to be here. Thanks for having me on.
I am delighted to have you on, Nicole. Of course, this is an emerging trend. It's been around for a while, but we're hearing more and more about how there can be kind of, so to speak, greener ways of processing metal. You hear of Rio Tinto and this bacteria that is somehow extracting more metal from the ore that they have. So I'm thrilled to have you on. For those that are not familiar with this topic, and I don't even know if we should use the term biomining, in a sense, what is it when we use microorganisms to separate the metal from the ore? In a sense, what do you call it?
It's a great question, and it's a really interesting and growing trend. And so I think the way to think about it is there is a biology enabled platform that is being deployed in mining and has huge runway of potential. And when you think about mining, you think about big mechanics and infrastructure, and you think about chemistry. You don't normally think about biology. And so, 30 plus years ago, biology was introduced in a heap leaching application, and they're using natural organisms to solubilize metals, similar to what you would do in a typical heap leaching, but they're using it biologically. And it's had some limitations over the years, and that's why it's only used in small amounts in gold and copper mining. But when you think about biology and the development that's happened in synthetic biology and all these other applications of food and fragrances and drug discovery, all of that development hasn't been applied to industrial applications. And so what we're seeing now over the last, I would say 5-ish years are companies looking at how do you take this development in biology that's really been matured in these other industries and apply them to mining. And it's such an exciting area of development that's new and just has incredible potential.
It's so interesting. And in a sense, I have so many questions already. But just for starters, just so that we have a general sense of the implications here, I mean, what kind of difference does this make? I assume it is a difference maker. So to give us some general idea, how does this change, traditional processing?
Yeah, I think, the way we're thinking about it in Allonnia, and I think it's true from a broader perspective, is to think about biology in terms of what it's good at, which is selectivity. And so, unlike chemistry, which you can think of as work in more of a bulk fashion, biology can be very specific. And there's kind of two ways to think about it that we think about it in Allonnia is in removing metals from waste streams. So let's say you have something like a rare earth element that's in a waste stream. It could be an e-waste stream, it could be tailings, and you want to just remove the rare earths and you don't want to remove anything else. Well, biology has the ability to be selective. And so you can develop proteins, as an example in this case, that are selective to rare earths, and then you can remove them from everything else in that soup of ore. So that's one way to think about it. The other way is typical with something like leaching, where you're solubilizing something. You can design organisms to selectively solubilize specific things. And it could be to selectively solubilize the desired metal, or what Allonnia is working on is to selectively solubilize impurities. And so in a mining process, maybe you have a problem with arsenic or fluorine or magnesium or calcium, and you really just want to remove those elements. You can be very specific with biology that's really not possible with other methods.
Okay, excellent. So is the ultimate, in a sense, cell here? I assume it's kind of a double cell. On one hand, it sounds like it's green and
Mhm.
therefore better for the environment. On the other hand, I imagine that in a sense you get better results. In a sense, more metal is being separated from the ore. Do I have that
Mhm.
right?
Yeah, and the real driver is on the value that this technology provides. And so if you think about, and I think about the infrastructure that has been established around the mining industry and these huge plants that have bottlenecks because our ore grades are declining, as an example, and our demand's increasing. Well, if you can put a bolt-on technology into this huge infrastructure, you are significantly increasing the value and it's effective today. And yes, you can build it into new plants going forward, but it really is centered around value. And so what I like about this approach is that it is green and you can decarbonize, mining and copper and nickel. You can reuse waste streams, but you're really providing the value. And that's the big driver. And I think that that is the way to bring sustainability into the conversation. But it first has to be driven by what are miners able to sell more of now than they could before.
Okay, excellent. And as far as it extracting more metal, does it do that as well? Does it get better results or maybe not even as good?
Oh, no. I like to think about it from the waste perspective. So there's two ways that I think there's the biggest value here is you've got tailings that you're familiar with, everyone's familiar with in the mining industry that have a lot of value and are not being valorized today. And there's a reason for that. It's difficult to separate these metals that are desired from what is in those tailings. Biology offers you a way to do that. So it really is unlocking potential that hasn't been explored before. So that's a whole new value stream. And then on the mining side, it's really being able to, and the way we look at it is remove impurities so you can get higher throughput through your mine and a higher grade. And so that helps the mining so they can sell a higher grade nickel or copper, for example. They can get more throughput through the mines. The sustainability play comes in because you're then smelting less of those impurities. You're transporting less of the mass. So there's that sustainability benefit from that perspective, but then also the ability to process more and increase the grade on the mining side.
In other words, what you're saying is when you apply this, in a sense, you have oftentimes better results. In a sense, you have a
Yeah.
purer result. Is that accurate?
Correct. Correct. And this is something new. It's not as if you could compare it to, well, you could either do this or that, or this is replacing this chemical, or this is replacing this process. This is really new and additive to what the processing plants are doing today.
And that's a very interesting point. So, in a sense, like you mentioned tailings ponds, which maybe just kind of sit there, like that's one application, right? And it's not
hmm
like you're necessarily substituting another way of doing it and saying, actually, you should use ours instead of that other
hmm
way. You're saying, actually, you have all that waste there and we can do something with that.
Exactly. And people haven't really thought, I mean, people have thought about tailings as a liability, but if you can think about it as a value stream, you're really serving two purposes. So if you're actually extracting metals from your tailings ponds, then you're improving the toxicity profile because you're removing some of those metals and you're getting value out of those metals. And it hasn't been done today because there hasn't been an affordable way to remove those metals. But, one of the applications that is being worked on today is to remove parts per million rare earths from waste streams. You think about how low of a concentration that is. That's not been possible in an affordable way with existing technologies. And so biology has the opportunity to change that paradigm.
I mean, this is pretty wild in the sense that it sounds like the revolution in biotechnology is basically bleeding over into the mining industry,
Yeah.
right? And you mentioned this is like the last 5 years that this has taken on a whole new significance. Is that a function of basically breakthroughs in biotechnology where all of a sudden things are easier to do, cheap enough
hmm
to do now, where this all of a sudden is a good idea, whereas before
hmm
it was just too complicated, too difficult. The technology wasn't there.
Exactly. That's exactly right. And it really is the right progression is that, there have been decades worth of development that only really a pharmaceutical type industry could afford to develop this technology. And so because it has gone through that development, we now can do things like sequencing of DNA and understanding of the microbiome and all these biological tools to understand what's happening the cost of that development has come down significantly. And so now you can start to apply it to industrial applications kind of across the board. But to me, mining is one of the most exciting ones to bring this technology because of the demand growth, because of the waste that's already in the industry, the sustainability challenges, and what's very important is the willingness for the mining industry to engage in these conversations. I've worked in the chemical industry for more than 25 years before I moved into this area that I'm involved in now, which is really exploring biology. And I would never have described the mining industry as leaders in innovation in the industrial world like I do now. There's just been such receptivity in the industry to look for new technologies. And a lot of it is just because there's such a need for it to get to these demand growth numbers that, we're all anticipating. But it's also very exciting and very new.
I have to say, as someone that's, reported and worked at the Northern Miner since 2012, this is music to my ears, and definitely, contrary to conventional wisdom, but it has been changing.
It has.
In a sense, I get surprised now when people say, that the mining industry is still backward looking. Like, that's what surprises me these days, because to your point, it's changed remarkably in the last few years. And to your point also, it is largely a function of this kind of increased importance and significance and demand for these metals. So we've discussed the theoretical, and I do have actually perhaps one more kind of more theoretical question, so to speak, and I want to get then into more kind of practical applications where you've actually used this. But in terms of rare earths, I mean, this has been one of the big stories of the year.
Mhm.
This issue with rare earths, and the real bottleneck is in the processing, where with the heavy
Mhm.
rare earths, China dominates actually. It's often said 90% for rare earths, but the
Mhm.
heavy rare earths, it's actually 99%.
Mhm.
So does this technology help in that regard? Because it's quite an issue right now.
Yeah, yeah. And I think you have highlighted what the real issue is. It's not that rare earths are rare, they are not. The limitation has been the processing step that's being done in China today. And so what happens is rare earths are mined outside of China and can be mined in many more locations. But today they're sent to China for processing. And the challenge in rare earth processing, there's these group of lanthanides on your periodic table, and they're all very similar to each other. So separating the lanthanides from each other is the big technical challenge. And that's done today using a solvent extraction technology, which is very challenging in terms of environmental profile, along with the other things that are tied up in those rare earth ores. And so other countries haven't really been willing to adopt that. And so it has been affordable to do it in China, and it has provided the ability to get supply in a way that is desirable up until now. And so what we're seeing today is, well, I'll just touch on the US for a minute, is that rare earths are used in several national security interests in defense. And when we start talking about China cutting off rare earth supply to the US, that has significant security implications. And so while the US has been thinking about this topic for a long time and dabbling in investment, it really has highlighted the necessity to develop our own domestic supply. And US isn't the only country, but this is one that we're seeing a dramatic change. And so the way to think about it is not just to mine the rare earths, but then to develop the processing domestically, or at least to have it be less reliant on one country. So bringing that back to biology and bringing that back to what I had mentioned earlier is the really interesting thing about biology, and from my perspective, is its specificity. Is you can design proteins that have a specificity to neodymium versus dysprosium. And so you can start that separation process using designed proteins. And now we can design proteins that are affordable for these purposes because of those trends we talked about earlier. So it really is all culminating into huge need, domestication, and the technology that is now ready for market in this way.
It's absolutely fascinating. From your perspective, I mean, do you think it's possible then, using, biotechnology, do you think it's possible to actually create a greener processing of rare earths? Like, do you see that as in
Absolutely.
the horizon of possibilities, so to speak?
Yeah, absolutely. And that's, it's why this is an area that Allonnia is involved in, but there are several other companies out there that are working in this space. And the US government is funding a lot of this innovation. And we are seeing results across the industry of being able to do that, being able to develop proteins that are naturally produced by organisms. So let's just start with the greenness of the manufacturing process, but then being able to separate out without using chemicals, using these proteins, and then being able to reuse those proteins. So you can recycle proteins, and the goal is to be able to recycle them, 100 times. So you've got this very green loop that is possible to do this. It's still, in the technology development world, we use technology readiness level 0 to 9. So it's still in the development phase, moving into the pilot phase. But I feel very confident that we will see this technology being deployed in the next couple of years.
Which in this business is actually pretty fast. So things are moving quickly. I mean, as far as you can discuss, I mean, have you gotten a knock on the door or the phone ringing from, people in the government,
Yes.
expressing interest? You have.
Yeah. Well, we have, yes. So we have government funding in our company. And again, not to say Allonnia is the only one. There are other companies that are working on this that do have government funding. So the government is funding the development, and we are working with one mining company in particular. And the reason this one can go so fast when you're talking about it, so you can look at it from extracting rare earths from waste streams, and then you can think about it from a mining perspective. You're like your virgin mining rare earths. Virgin mining rare earths and separating, and that's still a multi-year process. And that is more typical of, what you'll see historically in the mining industry. When you're talking about extracting rare earths from waste, that can be done quickly because these waste streams are sitting there. They're a liability. Putting a process on top of that, that can move fast. And so we'll see, a little bit of a bifurcation in terms of commercialization timing with these technologies based on one of those two approaches.
Okay, excellent. And just briefly before we get into more kind of practical applications, say for Alonia, how do you see this in terms of recycling, which I also see as kind of a massive trend out of necessity? It's kind of not the most glamorous subject in a sense, but recycling is becoming very important. I assume that this technology could have an application there. I mean, what do you think?
Yeah, sure. I am really passionate about the topic of circularity in general, and I'll come back to the recycling. And so when we look at the manufacturing processes that have been in place since the Industrial Revolution, they're linear processes. You're extracting a resource and you're throwing something away at the end and you're consuming something in the process. That's a linear process. When you think about nature, and we think about biology, it's a very circular process. And I think that we need, as a society, to bring circularity into our industrial processes. And so recycling is a way to do that, and bringing technology in that is appropriate for that is a way to do that. And what I'm really encouraged by is that the willingness, I think, for society, and I'm going to give credit to our younger generation that is much, I would say, more excited maybe than some previous generations, maybe my generation growing up, to take on this recycling as a real topic. And so we now see these recycling centers. So you have to change people's behavior. So you have to take your electronic waste and actually recycle it. And there's ways to be able to do that that are easier and easier. And then once you're recycling it, you have to have the technology then to extract the metal. And so it all has to come together. It's a somewhat complicated ecosystem when you think about things that have to change and processes that need to be put in place and the players that all need to come together. But we're starting to see moving in that direction. And so it is really encouraging. And I think that it's something that is very needed.
Now, Alonia has actually used this technology out in the field. It's worked with the Eagle Mine. Is that correct? Can you tell us about some of the kind of real world applications you've had with this technology?
Yeah, thanks. So, Allonnia, we're a 5-year-old company, and we really started with the premise that you can bring advanced biological solutions into industrial applications. And so mining was one of the first applications we thought of for this. And I mentioned the mining receptivity. We have investors that come from the mining industry. Some of the biggest mines are invested in Allonnia. But, the paradigm in mining is that it's hard for these big mining tier one companies to try new technology. And so what we've partnered with are other mining companies in this system, and Eagle Mine is one. So Eagle Mine processes nickel in the US. And they have seen, as other companies have seen, mining companies, ore grade decline over time. And so Allonnia has partnered with Eagle to deploy, it's a bolt-on technology that uses biology to selectively remove impurities. And in that case, we're removing things like magnesium and calcium. And so our first pilot, we've been working with them now for about 8 months. Our first pilot system will go live at the end of this year, which is a really exciting stage of development. And we're also working with other mining companies. It'll be our first pilot, though. And so I give a ton of credit to these innovative mining companies that are willing to be the first to try it, because that's what you need to bring new technology into commercialization.
When I go to the Eagle Mine website, I see Lundin Mining
Yeah,
underneath the logo. So is this Lundin Mining's Eagle Mine?
exactly. That's exactly right.
Okay, excellent. And you're not doing rare earths here. You're doing, it looks like nickel and copper.
Correct. So, Allonnia technology can be deployed almost agnostic of the metal because we're targeting the impurities. And so, in this case, whether it be nickel or copper or molybdenum or lithium or rare earths, because we're removing the impurities and not touching the desired metals, it's really a technology that's applicable to many of the different mines that, we're working with now.
That is super interesting. So, as you say, in a sense, it's not about the metal as the stuff that's around the metal that you're targeting here.
Exactly.
In a sense, you're kind of cleaning this metal,
Yeah.
of these so-called impurities.
That's exactly right. And each mine has a little bit different bottleneck. In some cases, and you think about we've been mining for decades. And so, you've heard the term sweet ore. The sweet ore is really gone. And so now we're dealing with these impurities that we've never had before. Levels of arsenic, levels of fluoride that create big problems for mining companies, and smelters don't want it. And so we really need ways to remove them that we've never needed before. So it's a real big challenge.
Okay, very interesting. And in terms of the waste, then, like, let's imagine there's some sort of impurity on the nickel. Does it get eaten up, so to speak, by the proteins, or does it simply get separated and then you're still left with a, undesirable substance, so to speak?
Yeah, that's a great question. And so the way we think about it is in that circularity lens. And so while we're removing these impurities, let's take the nickel example, calcium and magnesium, you can then use that calcium and magnesium in this case as a way to add CO2 and turn it into a carbonate. And so it can also be a sequestration method for CO2. And so what we really focus on is how do you take every part of that process and turn it into a circular system. So when we're looking at removing the impurities in each of these cases, we're evaluating what can be done with that when you're removing it. How can we use it in a different way?
So, as we start to wrap up here, Nicole, is there anything we haven't discussed in regard to this subject that you think should be mentioned here?
It's going to take a village to bring innovation and new technology into the mining industry. And for your listeners to really be thinking about the possibilities. And to me, that's what's so exciting. But it takes government, it takes policies, it takes really open mining industries that are willing to take a risk and a challenge. And it takes patience from innovators to be able to weather all of these different factors in development, and just really encouraging people to be open to possibilities, and maybe being willing to take on a little risk to bring them into fruition.
And just finally, so if people are listening to this who actually have a mine or are working at a mine and they think this might be helpful, in a sense, what kind of companies should reach out to Alonia?
Yeah, we are really working very closely with the mine operators. And so any mining company that is processing ore or looking to valorize their tailings or waste streams, are ones that we're really working with today and interested in talking to. And we're open, like we are a bunch of nerdy scientists and engineers. And, we're happy to talk about the topic and the possibilities and what's not possible in a very non-threatening, non-salesy way. So we've got some information on our website, allonnia.com, and definitely would love to have people reach out to us and just learn more.
Okay, excellent. And final question, big picture, where do you see this technology right now? Like, are we at the kind of early stages here where it's about to get really wild, say with
Yeah.
AI? How do you see things, maybe playing out?
Yeah, we are at the very early stages, and the possibilities are endless. Like when you think about how do we valorize all this waste that we've accumulated over the last decades, we're going to see a different lens that we view resources, not just natural resources, but waste resources as a new source of metals. And we're also going to see the ability to decarbonize this industry while meeting the huge growth demand that we know is coming over the next few years. So we're at the very start, but there has been such progress made across this kind of biotech industry in mining that it's going to look very different over the next 10 years.
Nicole Richards, CEO of Allonnia, thank you for joining us and sharing everything you're working on at the company.
Thank you so much for having me.
Thank you once again to Nicole Richards for appearing on this week's episode of the Northern Miner Podcast. And thank you, dear listener, for continuing to support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.